Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
One or two more questions, Jack, and then I think we need to let you go and have dinner with your family. James?
Steve, I see this one question I want to answer. I think it's a good one. I'm sorry to interrupt you. George asked how important is increasing U.S. manufacturing in the U.S. and helping stabilize the dollar. A lot of people poo-poo this point, but I think it's extremely important, and I think the possible positive benefits of this rebalancing in the global economy and building real Asian demand, which means freeing up the Asian consumer politically and because allowing their money to get out from the hermetically sealed China, which it is, means they're going to demand more from the West. And even without that, the idea that if U.S. can increase manufacturing, high-quality manufacturing creates a ton of spin-off jobs and leads to a lot of also research. It's a self-feeding process, and this is why China is very, very keen on doing the quid pro quo and making sure to transfer manufacturing technology to their country. They understand the importance here. It's not just old line manufacturing, these big hulking shells. Manufacturing is increasingly high-tech, and it spawns and creates all types of jobs throughout different sectors. So I think it's extremely important, and it also means that when you have a manufacturing renaissance, as we saw to a degree in the early 80s, which helped the dollar, you saw that foreign direct investment flowing back into the U.S. economy there, which was one of those big drivers in the dollar in that big bull market besides the yield differential. It wasn't just the yield differential created by Volcker. It was this unleashing the U.S. entrepreneur and a real increase in U.S. manufacturing base at the time. So I think it's extremely important for stabilizing the U.S. dollar in a very, very big way.
So on industrial policy, are you a big believer, Jack, of the government should have an industrial policy?
No, but I don't think they should have a policy that goes against the U.S. manufacturer, and that's what they have now. They make it so easy for people to move offshore, and because other countries' economies are very close to U.S. goods, even though they may fly under the radar of the World Trade Organization. There's all kinds of implicit non-tariff trade barriers for U.S. goods that can't get in the countries, and we're wide open. Make it an even playing field. That's the least our government can do. They still don't want to do that. I mean, I could go on with this because I think there's just powerful interests that make a lot of money doing stuff offshore and fund these think tanks that say all this stuff is free trade. If anybody, a sixth grader could look at the patterns and look at the relationships in terms of penetration and ability to get goods into countries and say this is not free trade. That's what bothers me. Just make it free. It's not free on both sides of the fence, and that's the problem, I think.
Right, reciprocity, huh? How does simply printing more dollars play into the reserve status story? And again, it seems like a lot of it, I spent some time with you in Canada where we heard this over and over and over again. People tend to only look at this from the U.S. perspective, right, Jack? They just say, we're printing a lot of money, but what about the other countries also?
Right, the other countries are printing money too and monetizing some debt. Under the radar, ECB is doing it by another method. But there's no doubt that printing of dollars, in effect, is monetizing of debt, which basically is printing dollars when the Fed buys Treasury paper, is not a good thing overall. But when you think of the price of a currency, try and think of it in these giant global macro terms of supply and demand. If U.S. dollar-based credit is coming out of the economy because of the private sector, and that outweighs the printing of dollars by the public sector, you still have a supply of dollars in the global economy, even though you're seeing big printing here in the U.S. So keep that in mind. It's not always just a one-way street, and we're seeing that to a degree, and that's why you're seeing that change in the current account deficit pattern, which is improving tremendously. But overall, printing of dollars in the way we're doing them by monetizing is not a good thing, I don't think, given that leverage was the problem in the first place.
And lastly, Earl has a question, and he wants to know, looking at correlations, do you think the dollar drives the equity market, or does the equity market sort of drive the dollar? Which comes first, Jack?
That is such a great question, and it's a very nuanced point that most people don't get, and because it's very hard to get your arms around it. Currency prices influence the fundamentals, and fundamentals influence currency prices. There's a natural feedback loop that's constantly going on, and you get into these, self-feeding loops in these things, and they're very, very important because the stock market is the largest repository of collateral values in the world. It's the, so if you see a currency going up and the stock market going up, they're powerful drivers in terms of pulling money in, increasing wealth, increasing loans, increasing credit, pulling in foreign direct investment, and they counteract and they support and self-reinforce, and they tend to do it on the downside too. So it's a very important point to keep in mind. It's not always the fundamentals that influence the currencies. The currencies also influence the fundamentals. It's again a nuanced point, but a very good one. A point that George Soros makes in his book Alchemy of Finance. I would recommend if people really want to get into macro global analysis. That was written in 1986, and to me is still the best global macro book out there, regardless of what you might feel about George Soros. The book is great. That's when he was just a pure macro trader and not a politician.
Jack, do you mind just giving us a closing statement? And then, first off, before the closing statement, I just want to say thank you. As getting a lot of great comments from the attendees that they really appreciate it. Every time that you come on, they learn more and more.
That's great.
I try to just sign up for the Currency Currents. You guys send out that Black Swan. You send it out every morning. So please, everyone, sign up for the Currency Currents. Jack, can you give us a closing comment, please?
Yeah, I just on that point, and just say, I really appreciate everybody being here and asking these questions because it forces me to think through these things, and I think, which is, try and get my mind clear, or at least around some of these things. I guess the broader point is keep it in perspective, this idea of world reserve currency. There are scenarios in which it could play out in a very nasty way, the U.S. losing its status. There are scenarios also where the U.S. starts to lose some of its status, but it necessarily is not negative for the U.S. economy. And there are also this idea that if we see this, what we think is going on, a structural change in the global economy and rebalancing, we think this idea of the world reserve currency status being an issue is probably not even going to be on the table in the next couple of years. So just keep it in perspective and don't panic about it, I guess is the point I wanted to make today. Understand the dangers, but also understand there's plenty of upside here if things can play out.
Well, Jack, thank you. I learn something every time you're with us here at the ISC, so very, very enlightening. It's just so informative. And again, you open my mind because, you'll go on to some subject and I'll have to think about it. And, it's just the light goes on. So thank you very much for giving us great information.
Thank you, Steve. Appreciate the opportunity all the time.
Yeah, well, thanks again, Jack. Jack will be with us early September. So please, again, join us. Next week, Mike Tussauds will be talking about neutral option strategies on Tuesday. Jack will be back early September. Please visit his website, sign up for the Currency Currents, and most importantly, come back to the IAC for future webinars, trade safely, and hopefully keep learning because, as Jack pointed out, nobody has all the answers, whether you're watching TV, websites, or anything else. It's all about coming up with plausible scenarios, looking at the risk reward that you're willing to tolerate, and go from there. So thank you so much for joining us. On the behalf of the IAC, this is Steve Meisinger saying have a great trading day tomorrow. Good night, everyone.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.